Hey everybody, Damien here from The Boring Traders. So today's video is going to be something that is commonly heard quite regularly in the trading world, but quite easily misunderstood. And that is what market structure actually means. So in this video, I want to go through market structure. It's one of the most talked about aspects of trading if you go in any books or any videos, but it's also one of the most misunderstood. You see, most traders tend to think it's something that you apply to your charts. It's not. It's something that you read. And once you get to understand the difference between those two, your trading can really improve. So the first thing I want to talk about is that market structure gets taught wrong. It's generally introduced as a form of patterns, higher highs, higher lows, head and shoulders, breaker structure, but most traders are never really shown why those patterns matter. So traders will memorize the shapes, memorize those labels, but they don't understand the behavior behind all of it. So when the market shifts just ever so slightly, everything starts to feel confusing again. And that's because traders are learning patterns, they're not learning the process. At its very core, structure is formed of three different things: moves, pauses, and commitments. And that's it. Structure answers three very vital questions. Where did price last commit? Where did it hesitate? And who's currently in control? You don't need indicators to answer that. You just need context. And that's the key thing. Context is everything. A higher high by itself is irrelevant. A break by itself is irrelevant. What matters is where it happens, what led into it, and what follows it. Structure is only existing because of prior patterns on your charts. And without the context, those patterns are just pointless. And that's why traders tend to get frustrated quite easily. They see the patterns, but they don't quite see that intent. So let's compare two charts, shall we? This first one here shows clear swings, clear pauses, clear commitments, and it shows logical errors of invalidation. Now let's go to the other one, and this one's showing overlap, there's compression, there's zero commitment, and there's just constant reaction on either ends. Both are moving, but only one is communicating intent. Movement doesn't always equal structure, and that's the trap that everyone falls into. In a previous video, I went through why indicators are not really best for your trading. And it's the same for this. They don't solve this problem. Indicators react to price. Structure explains the price. An indicator can tell you something's moved, but it won't tell you why it matters. Those indicators calculate, whereas structure requires interpretation. And it's why on a previous video, I explained that why stacking indicators doesn't improve that clarity. They sit on top of the behavior, they don't explain it. This is exactly why I focus on structure and patience when I'm trading. The goal isn't to trade more, it's to trade when the conditions are clear. And sometimes that does mean taking fewer trades. I built a program called Spidaro that physically looks at the markets and uses an AI intelligence with back-tested data to look at the markets when structure forms in the right way. It then helps me with my entries and exits, but believe me when I say I don't trade every day. There's no point. You're looking for the right trades at the right time. If you have an edge, that's profitable trading. Remember, patience protects your capital. Now remember, structure works everywhere. It's market agnostic. Forex, futures, crypto, instruments change, but human behavior doesn't. Once the structure clicks, those charts tend to look a lot more familiar to you, instead of being randomized. So to end this out, if structures ever felt inconsistent in the past, it's usually because it was taught as a pattern instead of a process. Your clarity will increase when you start reading the behavior, not the signals. It has to be something you recognize, not something you add. And then once you recognize it, your patience within the market will dramatically improve as well. That's everything from me today, guys. Thanks very much for watching. If you want to see more about this, please leave a comment below. Don't forget to like and subscribe. But for now, I will bid you adieu, and I will see you on the next one.